Good afternoon, everybody. This is Hunter Mozingo bringing you your daily market insight video here on Friday, April 8th, 10 minutes after market close, 4:10 p.m. Eastern time to be exact here in Jacksonville. And I have the big show for you guys today. We got 5 names coming off the 21 over 21. So that means we got 5 names that we're adding. We're going to get to that here in just a moment. We're also going to look at some of the leading stocks from today, leading sectors. We're going to take a quick look at interest rates. We're going to talk about key levels on the indexes. So we're going to get into all of that and have a great video. So let's get into it. What just happened? Choppy action while the Qs and the S&P try to cling to these key levels. We're going to look at those key levels in a moment. I know Don talked about them yesterday, but continuing to be really choppy. A lot of up, down as the day has gone on. Performance-wise here, G6 down a little over 1. S&P down about 0.25%. The Qs, the big laggard, down about 1.5%. Dow Jones Industrial Average, the leader today as defensive stuff, had a better day today, up about 0.5%, 0.4 there. Mid caps just slightly red, 0.08. Russell 2000 down about 0.75%. 60/40 down about 0.2, and Grotection up roughly 0.13. So in general today, the risk on, right, did not do as well, evidenced by the QQQ's performance there, and the risk off, the more defensive type of stuff, had a better day, evidenced by the Dow being green. So market state, uptrend with caution. Like I said, choppy action, and we're trying to hold on to these key levels on the S&P and the Qs. That is the reason for the caution. We've already seen mid caps and small caps break below some of their key moving averages. So that is another reason for the caution there. Moving on to the trend gauge, we do have some changes today. As you can see, market leaders and short term has been moved from up to neutral, right? So we've seen a lot of the leaders that were supposed to be acting well, really over the last, call it 3 to 6 trading days or so, not act so well, slice back their key levels, slice back their moving averages, that type of thing. So some of the strength we saw early in this week really has been evaporated, which is part of the reason why we've got these two moving. Short-term wise, I mentioned IWM and MDY back below those moving averages and the 50, 21 and the 50. That's why we've got this here. S&P and the Qs staying above, or trying to stay above, those 50 and the 21. Qs basically closed right on it today. S&P is still hanging on, trying to stay above all those key moving averages. So some changes today. Market leaders from up to neutral, short term from up to neutral. Move this arrow here on the medium term from right under to more towards neutral, meaning we're leaning a little bit more towards neutral here on the intermediate term. And then on long term, we've got the red arrow here straddling bearish. So trend gauge getting a little more defensive, as you can see here. 2 changes from bullish to neutral. So moving along here, let's get to Revere for just a quick moment, and then we're going to get into the tail of the tape and look at the indices. So as I usually do, this is me here in the middle. I know I always reference this, but if you have any questions, please just send me an email. If you're, want to hear more about something I talked about, want to ask a question, whatever it is, just send me an email, or you can email anybody here if you want to know more about Revere. Hunter, Dan, Don, Tim, or Merrill at revereasset.com. So let's get into the tail of the tape here, and we'll run through this pretty quick. You got the S&P 500 over here on your right hand side. It's actually SPY. So we'll pull up the real S&P index in just a moment here, but we'll run through this information quickly. Market state, uptrend with caution. We mentioned that already. The headwinds remain the same. Rising dollar, inflation, Fed taper, interest rates, Russia, Ukraine, all of that still very much alive and well. Sentiment wise, put call ratio creeping back up to 1. VIX really didn't do much today given the volatility, which is somewhat concerning to a degree, but more or less just down a little bit today, although we did see some volatility, but we really didn't see the S&P have any type of super volatile move to the downside, although the Qs were lagging to the downside for sure. Fear and greed index at about a 48, basically right there on the cusp of neutral and fear. So that's kind of where we are here on sentiment. Not much has necessarily changed over the last couple of days. Put call ratio still kind of continues to hang out in this 0.8 to 1 range. VIX back above 20, kind of staying there, but fear greed has been around 45 to 55 for the last couple of weeks too. Bull case, S&P still staying above these moving averages. Bear case, rally failure and a break, as Don has noted here. QQQ still below the 200-day. News-wise, nothing of note today. What were we watching today? As we can see here, what we were watching, the Qs versus possible resistance at the 21E and support at the 50-day simple. Two tests of the 50-day held. However, at the end of the day, we closed near the lows and actually just closed a tiny bit below the 50 on the Qs. S&P, as you can see here, we wanted to see what would happen around this 4490 level that we've talked about, as well as this 4450 level. And you can see we undercut and reclaimed this 4500 in the 200-day, as you can kind of see right here. And we managed to just eke out a close basically right on it. So like I said, a lot of chop, looked really poor coming into the close, but really just a super choppy day. And we're just kind of indecisively sitting right here on the moving averages, trapped under the 80 EMA. So that's kind of where we sit with the S&P. Action-wise, this just tells you the chop that we saw today. Open, slightly down 0.15%, fade, big pop, consolidate, fade, pop, fade again, and then close near the lows of the day for most of the indices across the board. So this really, the summary right here is choppy, 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 for lack of a better term. Notes, flow from growth into value continues. We saw the value ETFs outperform the growth ETFs today, particularly in the large cap, meaning the S&P 500 value versus growth. Performance-wise, we ran through this, but S&P opened down 0.15, closed down 0.26, G6 down 1% roughly, 60-40 down 0.2, grow up 0.13. Sector-wise today, as you can see, defensive stuff for the most part strong. Oils, gold, miners, staples, utilities, healthcare, bonds doing poor today, consumer discretionary, technology, communications, solar, semiconductors, software, and transportation all doing poorly. We did have two buys today, however. I mentioned the large cap value performing well. We bought that ETF today, and we also bought a position in MP Materials. So our beta slightly up. We're still very defensive in nature, but beta from 0.28 to 0.43. So a slight increase in the beta today. And bottom line, chop around these key levels continues. As you can see right here, we're just kind of chopping all around the 21 and the 200 on the S&P. On the Qs, we're kind of sandwiched between the 21 and the 50. So we're just kind of chopping right there in those key areas. Haven't really made a decisive move one way or the other yet. Moving along here, 4,500 was the prior close, as Don notes here. Support at 44.50 holds. Dollar flow into staples, healthcare. Today's close, 44.88, choppy action, not a great close, and more dollar flow into a lot of the defensive sectors today. So you can see here we've still got that 50-day starting to rise right here at about 44.27, and we've also got that 21 EMA basically stuck right there around 44.83, 44.84, so just slightly above on the S&P. So let's get into that, and I'm going to pull up the S&P index here, and you can see what I mentioned here. We closed near the lows today, so only a little bit above those lows, but right on the 200-day, right on the 21 EMA more or less. For the S&P, you can see we're kind of stuck right here between the declining 8 and the 200/21 EMA. So this little tight area is the chop that we're talking about between key levels here on the S&P. You'd like to see a move above these highs and a reclaim of the 8 from a bull case. Alternatively, you do not want to see these lows broken from the last 3 days as well. So let's go to the Qs quickly here. I mentioned basically kind of sandwiched between the 50 and the 21. You can see how that's played out here in this little area. I mentioned we basically closed right on the 50, about 30 cents below it, but more or less, we'll call it right on the 50 for the sake of just being a few pennies off there. But we actually did break this low or the recent lows here on the Qs, just further evidence that technology has been weaker, as you can see there. Moving here to the Dow, which is it's the only index that actually managed to make a close above the 8 EMA. As you can see, there's that little pink line, and it just closed right on it today, but back above the 21, back above the 50, and back above the 8 for the Dow. However, still below the 200. That's that black line you see there. And mid caps, which started off the day as one of the stronger indices, ended up finishing pretty poorly. MDY, as you can see here, below the 50, 21, and 8, looks like it basically ran right up into that level today and was not able to get back above. And what I mean is the 50. So ran up back into the 50 today, wasn't quite able to clear it. But this was one of the strongest looking indices up until the last couple of hours of the day. Today, mid caps were looking pretty good, and the Dow, but mid caps really faded as the day went on. And then IWM is very similar, just 3 closes below the 50, 21, and the 8, but really not going anywhere, just kind of hanging out here, not doing a ton, as you can see, just kind of hovering in this 202 to 198-ish, 197 range here on IWM. So IWM and MDY below the 50, 21, and the 8, S&P and the Dow above the 50, the 21, and the 8, and the QQQs lagging, like we said, closing right on the 50 today. So let's get into some of the top performing sectors and stocks of the day, and then we're going to get right into the 21 over 21. So XLV continues to make a really strong move and actually had a breakout today, as you can see here, over this 141.97 pivot. Really strong action and decent volume here on the healthcare ETF. We also had Oxy, which we own in Grotection, have a really nice day today after undercutting and reclaiming the 21, along with a lot of oils having a nice day today. CVX, another name we own in the portfolio. Sorry about that. There we go. That's the CVX we want to see. Also having a nice day today, an integrated name. And moving along here, John Deere, up about 2.5% today. One of the stronger looking stocks today, a similar undercut reclaim of the 21E back above the 8 as well. Regeneron, a healthcare name that is continuing to act well, getting a little bit extended here, but a nice breakout over the 686 level and the 700 level. GDX, gold miners, we mentioned this on the tail of the tape, but strong today, up about 2.5%. Tech goes hand in hand with that. It's in that group, mining and metal ores, one of the stronger names in its group today, up about 4%. And lastly, I'll go over these 2 buys we made here. So SPYB, we added this one today. Not a barn burner by any means, but it continues to look much better than the indices. As you can see, this is a nice looking chart, trending and looking pretty nice here. Whereas if you look at SPYG, sorry about that, SPYG, the growth component, not so good, below the 200, that type of deal. This looks very similar to XLC, XLK, and XLY, which we've talked about a good bit this week. And then our other buy of today was MP, a name that stays on the 21 over 21 list. Nice undercut and reclaim here of the 21. Also kind of bouncing off these previous highs, call it the 52 to 53 range there, and getting back above the 21. So those were the 2 buys today. Let's get into the 21 over 21. So we're going to start with the names that are staying on, and we're going to finish with the names that were removed and talk about the replacements. Okay, so first, AbbVie, a name that has been on here for quite some time and just really has gone off and gotten extended the last 3 or 4 days as healthcare has made that nice move. ABBV just trending higher on the 8 really since this day here back at the beginning of March, has not closed below it since. Arch, let me click on it here. Arch got back above the 21 after undercutting and being below it for 3 days this week, but back above it yesterday and then stayed above it today. You can see the low of today basically right on the 21 for Arch here. Berkshire, same situation, an undercut and reclaim. You're going to see that recurring theme a lot that did that this week. Undercut and reclaim back above the 8 here on BRKB. Costco, which we do own in Grotection, a really big move up to the 600 level and above this 571 pivot. You can see it got above this 571.49, pulled back to it, and had a really nice move off of it. Just hanging out right here around 600. Really can't ask for much better action out of Costco. CF in the fertilizer space continues to trend higher after this really nasty shakeout. Excuse me. Dollar Tree, similar story to a lot of things we've seen. Rode the 8 for a while, broke it, came back to the 21, and we bounced. That's what your stronger stocks, this is what you're going to want the last week or 2 to look like. There is a lot of stocks that had these pullbacks where they did not find support, and most of those are going to be in your technology space and whatnot. MP Materials, the name that I just went over that I talked about, we bought today. It got back above the 21 after undercutting today. DVN continues to stay in the list. It's really just been going sideways, kind of consolidating and digesting here around 60, but the last couple of days making a strong move up, getting relatively close to the 63.10 and 63.26 highs there on DVN. FCX, another one that undercut and then just eked out a close just tiny little bit above the 21 EMA, as you can see there. So FCX gets to stay on the list, and you can look at this name and tell it has a tendency to not respect moving averages, more so a tendency to respect trend lines and things of that nature. But FCX back above the 21. LNTH, which also had its fair share of volatility here in this range, but a quick reclaim of the 8 EMA, and it has continued to ride it over the last week and a half or two of trading. Big time volume still present here on this LNTH. Tesla still staying above the 21, although a poor close today. I mentioned big tech really not the strongest today, but 21 EMA is basically, you know, about 1% below, 1.5% below where it is right now. That's something to keep an eye on Tesla. First test of the 21 after a really strong move. You always want to keep an eye on that, especially when it's one of the most important stocks in the market. PSA, this is a REIT public storage, continues to trend higher. The real estate ETF looks very similar to what you see right here over the last couple of weeks, trending higher along the 8 EMA. Halliburton, which like many oil names, undercut and reclaimed the 21 and then had a really strong day today. PanW continues to be a leader in the cybersecurity space, digesting and consolidating above 600, which is really nice, and coming in right here to the 21 as it starts to catch up. Nucor continues to stay on the list as well. Just hanging out right here, consolidating around 150 as the 21 catches up. So you see a lot of that as I'm running through here. A lot of these commodity related names in particular, consolidating really nicely near the 21, and then a nice response the last couple of days. And then NEM, a gold miner company, same story, just continues to be really strong, respecting the 8 as far as on a closing basis here over the last couple of weeks. So let's talk about what came off the list, and then we'll look at our last 5 additions to the 21 over 21. So names that came off: Bros, as we can see here, a nasty move back below the key moving averages there on Bros. NVIDIA, one of those names that I was talking about as far as leaders not acting well. This was a stock that had big volume, was breaking a big downtrend line, and really just broke down along with the semiconductor sector as a whole, extremely weak over the last week and a half or two. SOX just absolutely getting crushed since 329. Most of the semiconductors having a really tough go of it. PSTG also off the list, nasty move back below the 21 and really hasn't had any type of reprieve so far, from 36 up here just a few days ago to 31 today. Zim, we've mentioned the shippers really getting hit hard too. Zim, kind of similar to what you see there with NVIDIA, with Bros, a sharp move down, not much of a bounce, and back below all the key moving averages. And the last one to come off the list was Sedge, back below its 21 EMA as well after a super choppy and volatile consolidation phase here for Sedge. So those were the names that came off. Here are the names that replaced them. John Deere being the first. As you can see, back above the 21, an undercut and reclaim, back above the 8 EMA. And I should note, anything that has a flag by it here, we own, right? So Cost, MP, CVX, we own. That is the next name that is going on the 21 over 21 as a replacement. You can see nice little consolidation here along the 21 EMA and starting to move higher here, back above the 8, making a run at this 170 level, getting back above this high right here from a couple of weeks back. General Dynamics, a name in the aerospace and defense sector. We got a handful of aerospace and defense names that look very similar to what this looks like. This one is one of the least volatile in the group, but trending nicely here along the 21 EMA as it kind of works up the right side, possibly to make a run at this 254.99 pivot. Oxy, another name that we own, I mentioned had a really nice day today along with a lot of other oils. Nice reclaim of the 21 yesterday and beautiful follow through with some volume today. And the last name here, Cameco Corporation. This is the leader as far as individual stocks go in the uranium space, which we have been talking about a little bit on the podcast. You can see this nice clean trend line we've got going here on uranium, kind of supporting these lows here which also happens to kind of correspond to the 21 EMA on CCJ. So CCJ looking really good, some big volume. Look at these big blue volume bars. That's really what kind of pushed us over the edge to add it in the 21 over 21. Some serious accumulation going on here. Look at the disparity between the blue bars and the red bars. So CCJ, the last name we added. So that is going to wrap up the 21 over 21, and it's also going to wrap up this video. I hope you guys enjoyed it. I hope you all have a great weekend. Please check out our podcast, and I'll see you all on next Monday's video.